Welcome to lesson 6 of the 1% playbook. Today we're going to be going into candlestick psychology. Candlestick psychology represents not only a pattern, but a story between sellers versus buyers. Okay, so I think we talked a little bit about this in a previous lesson, but to just go ahead and dive in here, we've got these two candlesticks right here. Okay, so we've got a bullish candlestick and we've got a bearish candlestick. Okay, so what do these candlesticks really represent? And that's what we're going to go over right now. So we're here on the daily time frame and looking at these two candles right here. As you can see, we were in a big bullish push to the upside over the past 2 days. Had this big bullish candlestick. This candlestick closed, and then we've got what we call our open of a candlestick. So I'm going to type right here, this is the open. Okay. And then we've got our lower and upper wicks of this bullish candlestick. So we've got our lower wick. Got our upper wick. And then we've got our close. Should put body close. Body close. Body open. So during this daily candlestick, the highest price went was 0.95077. Price rejected this area, came back and closed right here at 0.9485747. So body opened here, created a lower wick, came up, created an upper wick, and then price decided to close right here. As you can see over here on our bearish candlestick, instead of this closing, this is where the next daily candlestick opened. So we have our body open, and then down here we're going to have our body close. Got our body close down here, and then same exact thing over here. We've got our upper wick, and then down here we've got our lower wick. This type of pattern right here is often referred to as a tweezer top. Tweezer top pattern. A tweezer top pattern is a reversal pattern. You'll also see that you'll have tweezer bottom patterns. Kind of look like this. It consists of one bearish and one bullish candlestick. And typically, they indicate that price is turning around. And that's exactly what happened. We got this reversal, tweezer top pattern here. I like to look for these a lot, especially when I'm looking to enter a trade. You can also find tweezer top on tweezer top patterns or tweezer bottom patterns, reversal patterns on the lower time frames to help you with your entry signals as well. We've got another one here. As you can see, price was going up, had a tweezer top here, and price continued to go down. Came back up, tweezer top, and then price had a drop. Right here, I would consider this a tweezer bottom pattern. So this tweezer bottom pattern is a reversal pattern indicating that price is going to start going up. So tweezer bottom pattern indicates that price is reversing now to the upside. That's your tweezer bottom pattern, and that's your tweezer top pattern. So your tweezer top pattern indicates that we are reversing to the downside. Okay, so I look for these a lot, especially when I'm looking to enter a trade. So we have now identified your bullish candlestick and your bearish candlestick. So these blue candlesticks means that buyers pushed price up. These bearish candlesticks mean that sellers are starting to take over and they are now pushing price down. So taking a look at these wicks here, these are rejections from the downside. These are rejections from the upside. So if we have a long bullish wick, this means that sellers have rejected higher prices. Long lower wicks means buyers have rejected lower prices. Okay, so I hope you guys are understanding this. This is just all we're doing is identifying the candlestick. It's something you need to know. Your wicks, your body opens, your body closes. I'm even throwing in these tweezer top patterns and these tweezer bottom patterns just so that you guys can learn how to use them, especially in your entry signals. A lot of times we're trying to catch reversals, and these candlestick patterns, they indicate that we are reversing. They're one of my personal favorite patterns. My all-time favorite, you guys know, is the head and shoulders pattern. I love a head and shoulders pattern. I love when I'm about to enter a trade and I see a tweezer top pattern like this, and I'm entering sells, and I get a bearish engulfing candlestick, which engulfs the previous bullish candlestick. It's a very big indication that I can enter off right here and then catch sells to the downside. All right, we're going to go over indecision in the market. These candlesticks are called dojis. So you've got bullish dojis and you've got bearish dojis. And it so happens that right here, we've got a bunch of little dojis right here. So we've got 1, 2, well, I consider that a little doji. 1, 2, 3, 4, 5. So, and then down here you got 6, 7. So you got a bunch of little dojis right here. And all this means is that there's indecision in the markets, which means buyers and sellers can't decide which way to go. They are balanced and at a standstill. Circle this little doji right here. Indecision, which is called indecision in the market. It's called a doji, and it's where buyers and sellers can't decide which way to go. So they are balanced and at a standstill. As you can see, sellers continue to take over this big bearish engulfing candlestick, had a few indecisions, and then we actually had a reversal, tweezer bottom pattern, and price decided to reverse to the upside. We had a big push to the upside. So a lot of times when looking for an entry signal, our confirmation to enter a trade is if we're buying a bullish engulfing candlestick, like you see here, or a bearish engulfing candlestick, like you see here. So what makes a bearish or bullish engulfing candlestick? Typically, I'm going to say what is considered an engulfing candlestick. Engulfing candlestick is when a candlestick is bigger than the previous or two previous candlesticks. So I would consider this a bearish engulfing candlestick because it was bigger than the past 1, 2, 3, 4, 5 candles. And I would consider this a bullish engulfing because it engulfed the previous 1, 2, 3, 4, 5 candlesticks. So you could enter something right here, enter a long position off of the bullish engulfing. Make sure that stop loss is at the correct place just in case these big wicks come in, try and take you out, and then apply your take profit to a reasonable area. Enter off of and engulfing. Now we're really zoomed in, but that is how you look for an engulfing, and that is what is considered an engulfing. When a candlestick is bigger than your previous or two previous candlesticks, that is considered an engulfing because it is engulfing, it's bigger than your previous candlesticks, indicating that buyers are taking over the market or sellers are taking over the market. So right now I want to go over what a pin bar rejection is, why it's important. I want to go over two more patterns that I use in the market, which is called an evening star and a morning star. Okay, so right here is a perfect example. So we've got this pin bar rejection, this long wick giving us a rejection. So price came all the way down here, and then buyers started taking over. A lot of traders will call this candlestick right here a butterfly doji. But I don't want to confuse you guys because butterfly doji, I just call them dojis. There's also what they call gravestone dojis, which look a lot like this. It's just this, but reversed, meaning sellers are now taking over. Butterfly doji, buyers are taking over. Gravestone doji, sellers are taking over. Okay? So they look like this. But I'll go ahead, I'll just put butterfly doji there, and then gravestone doji right here. But I just call them dojis. That's what they are. And you can just kind of tell bullish and bearish dojis. There you go. Gravestone doji. Okay. So buyers are rejecting this area here, which is now signifying that we are going to reverse and start going to the upside. Now I see another reversal pattern that I look out for a lot, and that is our morning star. So we've got a morning star pattern right here, which consists of a bullish engulfing candlestick. Look at that. So here, this pattern is considered a morning star pattern. It's a reversal pattern signifying buyers are taking over. So we need to be looking to enter buys to the upside. Okay. Now, when you have this pattern at an area of interest, let's say I'm at an area of interest right here, right? Say I'm at an area of interest, price comes down into this area, gives me this morning star pattern, gives me my bullish engulfing candlestick. I'm entering this trade. Make sure that you're following your rules so that you're not creating any emotions in the market. You follow your rules, check off all the boxes, everything lines up, you take the trade. You don't want to have any emotion in the market because the market does not have any emotion. You don't need to have any emotion. You need to act like a robot. You need to be able to do exactly what needs to be done in the market. Not what you want to happen, but what needs to happen. You have to look at the market. Every single market is different. Every single time you enter is going to be a little bit different. But as long as you see these patterns, you go over your checklist, you have a much higher probability of your trade hitting your goal, your take profit. So if you have one of these patterns above an area of interest, we know we're going to be buying because we're bullish. If we have this bullish pattern here, this morning star pattern, as you can see, it works. Price kept going up. And then if we look over here, we actually get another morning star right here. So we're already in the trade. We were targeting these highs, which we would have hit, but as you can see, price did continue to go up for quite some time. So does that make sense? I want to also go over a evening star pattern, which is a reversal pattern signifying that sellers are taking over. So here's a good example of an evening star pattern. You see it's the same thing, it's just flipped. So we've got our evening star pattern here. Evening star pattern, which signifies that sellers are now taking over the market. Look at that. We also have a bearish engulfing candlestick. So we can enter sells here, short position. We can enter after the bearish engulfing candlestick. I always like to wait for a pullback at the previous structure point. Set my stop loss, and then target this area of interest down here, and that gives us a 1 to 2, and that's exactly what we're looking for. So the evening star, the morning star, they help you to identify trend reversals, especially when they're at an area of interest. They give you a much higher probability of your trade continuing in your direction because you're trading with the trend. So if you're selling and you're at an area of interest and you see this evening star pattern and you see this bearish engulfing candlestick, wait for the candlestick to close, maybe wait for a slight little pullback, and then catch the sells on the way down. Look at that. That would have been a perfect sniper entry. So you guys can. So this is our evening star. Oh, let's make ourselves a little area of interest right here. So we've got the evening star at the area of interest. We're below the area of interest. If we're below, we're selling. If we're above, we're buying. Price retested this area. And you could have gotten in on this engulfing. You could have waited for the pullback for the entry, enter the trade, and then wait till price hits your take profit. So going over everything one more time in our candlestick psychology section, we've got our candlesticks, which we identified, the body open of the bullish candlestick, the close, the upper wick, and the lower wick. Then we've got our body open, we've got our body close, we've got a lower wick, and we got our upper wick. We went over our tweezer top pattern, which indicates that we are reversing to the downside. We went over our indecision doji. So this just means buyers and sellers can't decide, cannot agree on which way the market's going to go. So they are balanced and at a standstill. We went over what is considered an engulfing candlestick, and that is when a candlestick is bigger than your previous two candlesticks. We went over our tweezer bottom pattern that indicates price is reversing to the upside. So we've got tweezer bottom and tweezer top. We've got our tweezer bottom, price is indicating that we are going to the upside now, and our tweezer top, that price is indicating that we're going to the downside. We found our morning star pattern right here at an area of interest. That is key. Our morning star pattern is a reversal pattern, signifying that buyers are taking over the market. So we need to start looking for buys, but we have to be above that area of interest. So we get this morning star at an area of interest. When we're above the area of interest, we are now looking for buys. That is a perfect entry setup. So we can enter off of this engulfing here and then continue to see price go to the upside. We went over our butterfly doji and our gravestone doji, just our bearish and bullish dojis. And then over here, we went over our evening star. Want to make sure that we are, again, at an area of interest, that we get this, our pattern. We see this evening star pattern. Price is now below this area of interest. We are retesting this area of interest. We get this evening star pattern, which is a reversal pattern, meaning sellers are now taking over the market. You can enter off of this engulfing or wait for a little pullback so that you get a sniper entry. Give yourself a nice sufficient stop loss above the previous high, and then set your take profit to the next low or area of interest, which typically is used as support, like it was right here. So we would have called this 1 to 2, using our evening star pattern at this area of interest. So those are pretty much the patterns that I use along with the head and shoulders pattern in order to take a trade. As long as those patterns are at a very valid area of interest, either a weekly or daily area of interest, like right here, wait till price is below, watch for a pattern. If you don't have a pattern, watch for your shift of structure in the 30-minute and the 1-hour time frame, and your bullish or bearish engulfing candlestick. So other than that, I hope you guys enjoyed lesson 6 here, which is our understanding candlesticks, understanding the candlestick patterns that you can use to give yourself a higher probability trade setup. So that's it. So feel free to go back and go over anything you didn't understand. Take screenshots, take notes. I hope you guys are understanding this and picking this up. I don't use too many patterns in the market, so we don't really have to memorize all these hundreds and hundreds of patterns. I typically only use the ones that I have now explained. Our head and shoulders, our double top and double bottom, our morning star, evening star, and then tweezer top and tweezer bottom. And that's really it. And as long as they're at an area of interest and they're in your favor, now your trade probability has just gone up a ton. But I hope you guys enjoyed this. I'll see you guys in lesson 7, where we are going to talk about break and retest. I made a lot of money with break and retest, and you guys are going to learn how to do the same thing.